Namaskar. Let's have a quick look at income tax filing requirement. Why to file income tax return? Because the source of income and its amount gets validated. In case one has a requirement of fund from financial institution or bank, then he may be eligible to procure the funds in case of requirement, right? And there are certain situations which makes compulsory to file income tax return. That is for company, for firm, and any other person other than company if total income exceeds the maximum amount not chargeable to tax. That is, if anyone has income exceeding 2,50,000, 3 lakh, or 5 lakh, as the case may be, then he is under an obligation to file income tax return, right? And it also makes mandatory to file income tax return who holds as a beneficial owner any asset, including any financial interest in any entity located outside India, or has signing authority in any account located outside India, who is beneficiary of any assets. It means he has not acquired assets directly, but he is receiving income from any assets located outside India on the direction of the beneficial owner who has acquired the assets located outside India. Then beneficiary is also under an obligation to file income tax return on or before due date. Beneficial owner means who provides consideration for the assets to be acquired located outside India. Beneficiary whose accounts get credited from the income generated assets located outside India. They are the beneficiary. Next to say, an SSE whose income is not exceeding the maximum amount not chargeable to tax. That is, income is having less than 2,50,000, 3 lakh, or 5 lakh, as the case may be, but he has deposited exceeding 1 crore rupees in his current account. He has incurred expenditure exceeding 2 lakh rupees for himself or any other person to a foreign country, for travel to a foreign country, and he has incurred expenditure and amount or aggregated amount exceeding 1 lakh rupees towards the consumption of electricity. In all these circumstances, an SSE is under an obligation to file income tax return on or before due date. It has been further said that whether someone is under an obligation to file income tax return or not, this will be considered before giving exemption under section 54B, 54, 54D, 54EC, 54F, 54G, 54GA, 54GB. It means these all exemptions are available against the long-term capital gain, and so these are the exemptions which is in lakhs. It has been said that whether someone is liable to file income tax return or not, this will be considered before giving exemption under these heads. And however, it has been said that there is no requirement to file income tax return if total income after deduction under section 54E is below taxable limit. We will understand the term like this. Suppose someone had sold his house property during the financial year for 52 lakhs, and he has invested 50 lakhs for all these exemptions or any of these exemptions. Then whether he is liable to file, whether he is under an obligation to file income tax return or not, will be considered before giving exemptions. That is, he is having income 52 lakhs exceeding 2,50,000, then he is under an obligation to file income tax return. However, if this 50 lakh has been invested under section 54E, that is for a startup enterprises, then his obligation whether to file income tax or not will be determined on the basis of 2 lakh rupees. His income is being 2 lakh less than the 2,50,000, he will not be under an obligation to file income tax return. So this 50 lakh investment will depend on the nature of the investment, whether he has invested under these sections or under these sections, that is 54E. The condition is that he will not sell the unit acquired for a startup unit acquired on a startup enterprise for a period of 3 years from the date of its acquisition. That is the condition which applies in case of investment of rupees 50. Further, it has been said for charitable trust and religious trust, charitable and religious trust, it has been said that they will be eligible to claim exemption under section 11 and 12 only when he has filed return on or before the due date under section 139(1). That is, under section 11 and 12, a charitable or religious trust does not need to defer the expenditure irrespective of its nature, with that is capital expenditure or operating expenses. They are eligible to claim all the expenses irrespective of its nature in the same financial year in which it has been incurred. It has been said that exemption under section 11 and 12 shall not be available to charitable or religious trust if return is filed after the due date specified under section 139 subsection 1. For political parties, all income except business income is exempt under section 13A. Further, it has been said that the political party return under section exemption under section 13A shall not be available if return is filed after the due date specified under section 139(1). Right? Hospitals, medical institutions, school, colleges, etc. If total income before giving the exemption under section 10 exceeds the maximum amount not chargeable to tax, is under an obligation to file income tax return. Under section 10 is more or less like section 11 and 12. It also gives eligibility for hospital, medical institutions, school, colleges to claim all expenses in the same financial year irrespective of its nature. Next, university, college and institution referred to in section 35(1)(2) and 35(1)(3) if not required to file return under any other provision of this act, then is under an obligation to file income tax return. For business trust, also investment fund, also if not required to furnish return of income under any other provision of this act, then is under an obligation to file income tax return. Normally, the due date of filing income tax return is 31st July. However, whose books of accounts is required to be audited, then due date is 31st October. And who is having income from international transaction, the due date is 30th November. Right? It has been said, a spouse of such partner, if the provision of section 5A applies, a spouse of such partner, if section 5A applies, it means in Goa, all income other than salary is to be divided between the spouse as per the rules of the state, right? As per the rule is state applicable. It means one spouse is having income from the company or the firm whose books of account is required to be audited, and the spouse having income from international transaction, then one of the spouse having income from the international transaction or the books of account required to be audited, then his due date will be 31st October or 30th November. Other spouse who is having only normal income, being the amount of income to be shared by other spouse, then due date will also for other will be 31st October or 30th November instead of 31st July. Section 234 F says fee for default in furnishing return of income is 5,000. If any SSE has failed to file income tax return on or before due date, that is 31st July, 31st October, 30th November, the penalty of 5,000 rupees shall be levied. However, it has been said if income does not exceed 5 lakh rupees during the financial year, then the fee payable under this section shall not exceed 1,000 rupees. 272A, penalty for failure to file return of income, 139 4A, 4C, 4A for charitable and religious trust, and 4C is for medical, hospital, institute, hospital, school, colleges, etc. Then penalty of 100 rupees per day during which failure continues shall be levied. Section 139(3) says an SSE will be eligible to carry forward the losses under the head PGBP capital gains only when it has filed income tax return on or before due date. That is, the loss cannot be carried forward if ROI is filed after the due date specified, that is 31st July, 31st October or 30th November. However, it has been said loss under the head income from horse property, loss of the earlier years, and observed depreciation will have no impact if a return is filed after the due date in current assessment year for relevant financial year. Again, it has been said loss of a specified business referred to in section 35 AD, that is for warehousing, cold storage, etc., can only be carried forward if the return of income has been filed on or before due date. However, an application can be filed to the concerned authority for condonation of delay. If loss is up to 10 lakh rupees, then application can be made to CIT. If loss is 10 lakh to 50 lakh rupees, then application of condonation for delay can be made to CIT. And if loss is above 50 lakh rupees, then an application for condonation of delay can be made to CBDT. Right? And delay in filing of returns having claim of refund can also be made as per the explained provision. That is, if refund is up to 10 lakh rupees, then condonation of delay can be filed to CIT, and cheap CIT if 10 lakh to 50 lakhs, CBDT if exceeding 50 lakh rupees. No condonation of application for claim of refund or loss shall be entered beyond 6 years from the end of the assessment year. It means, suppose for financial year 21-22, 31st March ended 2022. Assessment year is 22-23. It will end on 31st March 23. Right? 6 years from 31st March 23 is 31st March 29. Then the application for claim of refund can be made to the concerned authority up to 31st March 2029 for the financial year ended 31st March 2022. If person has not furnished the return of income within the time allotted, then he may furnish belated return before 3 months. Prior to the end of the relevant assessment year or before completion of assessment, whichever is earlier. It means 3 months prior to the completion of relevant assessment year is 31st December, 31st March being end of the assessment year, and 3 months prior to 31st March is 31st December. Then the maximum time period allowed for filing the belated return is 31st December. If a person having furnished return under section 139(1) or under section 139(4) discovers any omission or wrong statement, then he may furnish revised return at any time before 3 months prior to the end of the relevant assessment year or before the completion of assessment, whichever is earlier. Again to say, the revised return can be submitted maximum by 31st December. Revised return substitutes the original return from the date the original return was filed. It means the revised return can be submitted any number of times, and a return filed can be revised any number of times in case he discovers any omission or wrong statement in the return file. But the revised return date will be the date on which original return was filed. Again, defective return, section 139, subsection 9, a return shall be considered as defective unless it is accompanied by all, that is, return in prescribed form, tax audit report under section 44AB, copies of audited profit and loss account, balance sheet, auditor's report. A return shall be considered valid only when it is accompanied by all of these documents. If tax interest payable in accordance with section 140A and tax have not been paid on or before due date of furnishing return of income, then return is valid and return is not defective return. If tax interest payable in accordance with section 140A, that is self-assessment tax, have not been paid on or before the date of furnishing the return of income, on or before the date of furnishing the return of income, that is 31st July, 31st October and 30th November, then return is valid and return is not a defective return. Right? If AO considers that return is defective, then he shall intimate the defect the assessee and give him an opportunity to rectify the defect within 15 days. Right? An assessee will be given 15 days time to rectify the return if the return is defective. However, an assessee may also request to the assessing officer to extend the time period if he finds it that to rectify in return filed is not possible within the time period allowed 15 days, and then assessing officer may also extend the time period of 15 days. However, if return is not rectified, then will be treated as void ab initio, and it shall be deemed that the SSE has not filed the return of income. Right? What will be the situation in case an SSE does not file? Then an SSE will be receiving the notice under section 142, and best judgment assessment under section 144 can also be passed by the assessing officer. We will understand this term, the consequences of not filing the income tax return in later on. But as of now, if rectification is not made within the time period of 15 days as allowed by assessing officer, and in extended time period, then the return shall be treated as void ab initio. That's it as of now. Where the SSE rectifies the defect after the said period of 15 days or the extended time period, but before the completion of assessment year, then AO may condone the delay and treat the return as valid return. Okay. Quoting of Aadhaar number. Every person who is eligible to obtain Aadhaar number shall on or after the first day of July 2017 quote Aadhaar number or enrollment ID of Aadhaar application form. Right. In case of failure to intimate Aadhaar number, the permanent account number allotted to the person shall be made inoperative after 31st March 2022 in prescribed manner. If someone has not, that this is the case of linking Aadhaar number or PAN number. The last date is 31st March 2022, and in case this is not done, then it will be considered that he has not quoted the Aadhaar number. The consequences of not quoting the Aadhaar number will be he will be liable for a penalty of 10,000 rupees. Failure to apply for PAN, where it is mandatory to have PAN. Failure to quote PAN or Aadhaar number where he required. Failure to quote correct PAN or correct Aadhaar number wherever required, or failure to authenticate PAN, Aadhaar, who furnishes PAN or Aadhaar. Okay, so this will be the consequences of not quoting the Aadhaar number. If SSE does not have PAN but has Aadhaar number, then he can quote Aadhaar number where there is a requirement to quote PAN. In such case, PAN will be automatically allotted to him. It shall be deemed that he has applied for PAN. He is not required to apply for PAN or submit any document for getting the PAN. Section 234H says, fee for failure to intimate Aadhaar number on or before 31st March 2022 is 1,000 rupees payable at the time of मेकिंग इंटीमेशन लेटर. अगर 31 मार्च 2022 तक कोई इंटीमेट नहीं करता है तो उसके ऊपर 1,000 रुपये का पेनल्टी लगाया जाएगा जब कभी वो 31 मार्च 2022 के बाद इंटीमेट करेगा. तो सेक्शन 140A सेल्फ असेसमेंट. द पेमेंट रिक्वायर्ड टू बी मेड अंडर सेक्शन 140A अलॉन्ग विद द रिटर्न ऑफ इनकम. जब रिटर्न फाइल किया जा रहा है तो सेल्फ असेसमेंट टैक्स जितने भी हैं वो इसके ऊपर पे करने पड़ेंगे. दैट इज इनकम टैक्स की जो लायबिलिटी है, इंटरेस्ट जो उसके ऊपर अप्रूव हुआ अंडर सेक्शन 234A, 234B, 234C, और फीस अंडर सेक्शन ऑफ नॉट फाइलिंग द रिटर्न ऑफ इनकम अप टू द डेट ऑफ स्पेसिफाइड, दैट इज 31st जुलाई, 31st अक्टूबर और 30th नवंबर. तो फी ऑफ 5,000 रुपीज विल ऑल्सो बी लेविड. लेस will be if relief under section 9098, that is this relief is available for under DTAA. MAT credit, TDS, advance tax relief claimed under section 89, that is 12,500 if an SSE is having income up to rupees 5 lakh rupees, and this has started in started from Finance Act 2019 onward. Tax and interest thereon payable in according to section 191, that is self-assessment tax on ESOP in case of a startup employee, and this self-assessment tax is to be paid along with the return of income. Right. Where self-assessment tax paid is less than the amount required to pay, then first is it will be adjusted for 234F, that is for penalty, and then it will be adjusted for interest, that is for 234 ABC, and then balance towards will be adjusted for income tax liability. And the return is to be validated by the concerned person himself, and in case in respect of a company, an application for corporate insolvency resolution process has been admitted, then the liquidator appointed or the resolution professional appointed by adjudicating authority, that is NCLT, will verify the return of income. Thank you very much.